afternoon belongs to auto names. Bharat Forge reported numbers a while back, and now Eicher Motors numbers are flashing for you on your screen. At the bottom line, 740 crore is bang in line with what the street was anticipating. So this would be a strong 60% growth in the company's bottom line. EBITDA margins at 23% is an expansion on a year-on-year basis because the comparable quarter of last year, margins were at 20.2%, but it's slightly about 80 basis points lower than what the CNBC-TV18 poll had thrown up. As you can see, net profit up 62.5%, margins expanding on a year-on-year basis to 23%, but a bit lower than consensus expectations. Sonia is here with the details. Sonia, you were expecting a very strong showing from Eicher Motors, considering how robust the Royal Enfield sales were, and the company's delivered.
Oh, absolutely. But, there are no positive surprises here. The numbers were expected to be strong and they are absolutely in line with expectations. Now, the thing is, in this quarter, the Royal Enfield business has done very well. That's because of the new Hunter 350 series, 350cc bike which was launched. It was received very well by the street, and that led to a really strong volume growth of 31% year on year. And that's the reason why you've seen the numbers as well be very strong this time. The revenues have come in at 3,721 crores. That is a growth of almost 30% on the top line. Now, on the margin front, I think this will come as a surprise to most. The fact that the margins, have come in at that level of around 24%. Now, the reason is that same time last year, the margins were about 20.2%. This time it's come in at 23%, I beg your pardon. So that's a 300 basis points rise on a year-on-year basis for the margins for Eicher Motors. Now, this is a good thing because remember, the blended margins have been under a bit of pressure with the new Hunter 350cc. That's because the Hunter is a low margin product, and hence the fear was that although volumes will rise, margins may not rise proportionately. In that context, the margins are slightly lower than what the street was estimating. So perhaps that's the reason there's a little bit of a disappointment in the stock. Going forward as well, as the volumes of the Hunter 350cc rise, the margins, could get compromised because it's a low margin product, and hence that's the reaction that you're seeing on the stock. But that's just a smaller worry. I believe that, Eicher Motors is on a path to recovery, at least in terms of the numbers that the company has reported so far. Even the Volvo Eicher business has done pretty well. Volumes have grown quite a bit because of the recovery of the commercial vehicle cycle, and margins have picked up on the back of lower raw material costs as well as higher operating leverage. So yes, these numbers are looking very strong. The only niggling worry, as I said, is that blended margins are slightly below what the street was estimating because of the higher volume of the low margin Hunter 350cc which the company has sold.